Well, yesterday was a no deal day, and you've just summarised exactly what happened, which is the pound went down, gilts went up, and equities really took no part in it, because the UK market isn't very domestic these days, and so a lot of UK domestic investment is actually not really relevant to the day-to-day activity in London markets. We're more interested in the rest of the world. But having said it, it's pretty uncertain. It's been political theatre, but it's had relatively little effect on the equity market so far.
With the exception, I note, though, of a number of the big British banks, we saw some sizable declines across the banking space yesterday in UK trade. Does that now present an opportunity, a buying opportunity, considering that we saw declines of 5, 6, 7% for some of those big names?
Yeah, I mean, we've certainly been looking at it, but the uncertainty is in the domestic economy. The banks are a pretty good proxy for that, along with the house builders, and that's where the pain was yesterday. You know, my judgment as a fund manager is that it's still just too early, because we saw the ministerial resignations yesterday. There's been a pause while everybody had a bit of sleep. We'll see what news comes out today, but I don't think anybody can say with certainty which way this is going to go.
Sure, David, you know, that kind of leads me. So we've been kind of muted in terms of our customer base out here in Asia and in the U.S. in terms of just overall reaction to it. Like, do you think that there's some type of underreaction so far at this point? And if so, are you positioning kind of as a money manager or wealth manager, like to a certain, like for a hard Brexit, or are you kind of still wait and see, I guess, so to speak?
There's a bit of wait and see, but the positioning is roughly where we were before the referendum, which is that we're basing our judgments when we're investing in the UK markets on global trends rather than on UK-specific issues. And that sort of is where we are at the moment. That hasn't needed much tinkering with. The key, though, is the currency, and the spread of outcomes there is significant. And I think, if anything, the market is tending slightly towards a deal being done in terms of the sterling rate. So if there is no deal, I think we've got downside in sterling, and that will have implications for international investors who think in other currencies, and also for domestic investors who would have to adjust their allocations if we saw further weakness of the pound.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.